Hello, in this presentation we will define balance sheet. According to Fundamental Accounting Principles, Wild 22nd edition, the definition of balance sheet is financial statement that lists types and dollar amounts of assets, liabilities, and equity at a specific time. When considering the balance sheet, we're really looking at the double entry accounting system formatted in terms of the balance sheet, in that the balance sheet will have three components: assets, liabilities, equity, and we will see the format of the accounting equation in that the assets will equal the liabilities plus the equity within the balance sheet. Remember the idea of what assets are. That's what the company is holding on to, that they're going to use sometime in the future in order to help generate revenue, the generation of revenue being the goal of the company. That's going to equal liabilities, liabilities being what the company owes to someone in the future or a company in the future, payments that are going to be due in the future for past transactions that have taken place, things like something owed to the vendor, credit cards, loans, payments. And then we have the equity, and that represents how much the company owes basically to the owner, meaning if it's a sole proprietor, it might just be one owner, how much it owes to the partnership, how much it owes to the stockholders if it's stockholders' equity, if we're talking about a corporation. And that's basically what we have. And everything that the company owns is owed to somebody, either a third-party vendor or the owners of the organization. In terms of the balance sheet, it's going to look something like this. It's going to have a point in time. Notice the balance sheet is as of a point in time, not a time frame. We're not measuring performance here. We're saying this is where we stand as of a point in time. Therefore, we only need one date. We're going to have the accounting equation represented in terms of assets here. We've got the total assets, typically broken out in terms of current assets and longer term assets, current assets, and then property, plant, and equipment. And then we're going to have the liability portion, also typically broken out in terms of current liabilities and more long-term liabilities. And then we will have the equity section. In terms of a sole proprietor, it would be owner's equity. If it was a corporation, shareholders' equity, partnership equity. And then we're going to have the total here representing our accounting equation, representing that the balance sheet is in balance. We have total assets equal total liabilities plus equity. This is going to be the entire accounting equation represented here. It's all represented in the balance sheet. When we want more of the story in terms of what is going on in the timing statements, that's when we have to look at the income statement and the statement of equity. If you want more information in terms of the balance sheet and other financial statements, recommend taking a look at Accounting Instruction Reference Number 100. One of the main resources being that we'll have a list of information that you can drill down on and see what you need at any given time, and then link to that information, and the text will then link to free resources on a website that will have instructional videos, we'll have games, we'll have web worksheets, Excel worksheets that you can work through and see how things are calculated out within Excel worksheets, which I highly recommend taking a look at.